Hey, so a quick update. I was looking through a bunch of the alts. I don't really have much time now. Later, I could do a stream and everything. My migraine's coming back, but I have a feeling I'll be good for tonight. Anyway, um, so I was looking at a bunch of alts, and I stumbled upon BAT. Now, I haven't traded BAT lately. I used to hate it. It screwed me over a bunch of times. Then I did really well. I actually made some really good analyses of late on BAT. I just didn't enter trades. So now, after that big dump, I was looking at a potential next wave up, and I'm seeing a pretty realistic scenario. So there's a lot of old support and resistance on this chart. It's pretty hard to read with all that crap, but I'll explain what I'm looking at. So essentially, that big run up and that big correction, ignore all that. I'm looking short term here based on the 4 hour since that last bottom, right? So since it bottomed out right here and it got down to my old support right on the top of the cloud, incidentally, right? See how all these candles, boom, wick, body of the candle, body of the candle. All these wicks and bodies of the candle are getting incredible support from the top of the cloud, right? That's one of my key EMA dynamic supports, as you guys know. The top of the cloud is a killer support in those situations. Then the bottom of the cloud, when the top fails, that's the backup. Top failed, look, bottom of the cloud right here. You can see if you look closely. Top of the cloud failed, the bottom, strong support, bottom, strong support, bottom, strong support. The entire way up, we were running along with the cloud pretty much. And now we're just below the cloud. So the cloud is now resistance. So that's why I'm thinking it may be slightly early to get in, but let me tell you everything else I'm looking at. When the cloud is no longer in play, the EMAs are super crucial, right? The EMAs provide the most relevant support and resistance for each of my dynamic supports. So if I take this as like a wave one, and this is a wave two correction, I haven't actually jumped in much detail yet. I'm doing a live with you now. This is the first time I've done a Fib retracement, but let me see if I do a Fibonacci retracement from the bottom of that run to the top of that run. Let me see if we end up retracing to the 618 or lower. So yeah, right pretty much to the 618 is almost exactly where we retraced to. I just moved it by mistake. Hold on. All right, so you can see here we retraced right here very close to the 618, and we bottomed out on one of my horizontals, right? That was one of my key horizontal support resistances from the past. If you see where that bounced right here, right? Big bounce right there. But if you look left, you'll see that this was actually a really strong support in this entire area, and it was a resistance in this entire area right here. So this entire portion, everything you see on screen since the big dump, that horizontal has been a really important support and resistance. And it looks like that was the main bottom, and then it got retested again. It went up. Look at my cursor. It bottomed out after the correction, went up, right? Came back down, retested it again, and now it's moving back up. I think this move back up could actually be a strong move. And the potential here could be significant because if you consider this a wave one, let's do a Fib extension. Again, I know the chart's really messy, but I'm going to show you what I'm looking at. So if I do a Fibonacci extension and I take my cursor down here from the bottom of wave one, right, just like the Fib retracement I just did, bottom of wave one down there to the top of wave one right here, right? Just like the Fibonacci retracement I just did, except now I'm doing an extension tool where I went from the bottom to the top, and now I'm going to drop it right here, right below that 618 Fib retracement, right, which is that the bottom of that wave two correction. See? So now that I did that, let me make sure I dropped it in the right place. Slightly off. Let me adjust that. Here we go. Should be a little bit lower. So that means a potential target, right? If I'm right, and that right there was the bottom of that wave two correction. So we had wave one up. Wave one was the big move up, and then this move down. So if this is the beginning pretty early on in the beginning of wave three, then the 1618 extension all the way at 3115 up here could be a potential target. So I'm not 100% sure about this yet, but just to give you an idea of the potential here and why I'm considering entering a trade, if I were to get in here, right? So I'm setting the price at the current price and went all the way up to the 1618 extension, which would be up here, 32% and change. So there's a potential for a wave three to yield a 32% and change run. So given the amount of potential there for such a substantial return, it's worthwhile to at least consider getting into a trade here. Now, can I do it with risk management in mind? Can I keep my risk under control? I'm going to want to do a few things. I have to go actually, but let me just really quickly show you. So if I look at the daily, I can see, all right, let me look at different time frames. The daily, the Stochastic is extraordinarily bullish. This is an incredible sign. So is the fact that we're right in the middle of the cloud, right? One of the other key things here, check this out. Look where the 1618 is. This is serendipitous. For you guys who have been here a while, who know how I trade, who know my systems and know my strategies and my models and my techniques, you know that this is incredible. Like I didn't know this before I started to do this review with you. I just kind of spotted a few things about that I thought looked good. And this is just getting better and better by the minute. That's right at the top of the cloud. We're within the cloud now. So I always say, usually when you break into the cloud, you can run all the way across to the other side of the cloud. So right now, in theory, that 1618 extension at 3115 is almost exactly at the top of the cloud. There's a very, very real possibility if we get a bull run here, like I think we can, we get a 32% run to the top of the cloud before a big rejection. So the daily plus the bullish stochastic right here, the fact that the Stoch just turned back up and that's switching to bullish right now, that's another extremely, extremely, extremely bullish sign. Let me just see something here. I want to see. There's only an hour. So if you look here on the right at the current price down here, look to the right, 53 minutes and 44 seconds. That means this daily candle is over in an hour. So we're pretty much about to confirm this bullish closure. See the Stoch as it crossed over and it's turning back up. That's bullish. As long as we don't dump in the next hour, like dump all the way back down to below the 222 here, we're going to get confirmation on this bullish reversal here. So there's a really, really high probability that's going to hold. So again, go back down to the 4 hour and then saying, all right, if I were to enter right here, say I were to set my price right at the current price. If I were to buy right at the current price, place my stop loss below the 618 retracement, which was that potential bottom. Although this horizontal this horizontal right here at 226, that was the main bottom for that last dump, right? That's where all these candles held. I would really like to place a stop loss below that. Since there's so much potential on this trade, what I might do, I might make this a double trade where I have a short-term position and a longer-term position or a mid-term position. I'm going to enter into a short-term position on BAT where my stop loss is going to go below the 99 EMA, which is the main support, and then the 618, right? So my stop loss is going to go 3% below my entry to start. And then if we start getting that bounce and that push up, then I can pretty quickly move my stop loss up to reduce my risk because 3% is a little high. Then I'm going to take another position, like 25% of my overall buy, maybe 35% will be a midterm hold where I'm going to set my stop loss all the way down here, so it's about 5% below my entry, 4.75% below my entry. Now that I'm taking a much larger risk with my stop loss being much lower. However, I'm putting less money into it. So it's not like I'm going to take more of a loss. I'm going to take the same loss as if I put more money into it because the probability and the amount of return is so significant. It's worth it to take the additional risk. And by putting less money into it, my overall potential capital loss is identical. It doesn't matter. I could put in $10,000 and lose 10%, or I could put in $1,000 and lose. Oh, I don't even know. What was I trying to say? If I were to put in